Ever pondered over the best investment strategies to grow your wealth? The world of investing can seem like a labyrinth with countless paths to choose from, each promising a different kind of reward. But what if we told you there's a proven strategy that could guide you through this maze? A strategy that focuses on buying stocks at less than their intrinsic value. Yes, it's about making your money work smarter, not harder. Today, we unlock the mystery of one such strategy known as value investing. Imagine buying $1 for 80 cents or less. That's the basic premise of value investing. Now, let's dive a little deeper into this captivating world of investment strategy. Value investing in its simplest form is a strategy of selecting stocks that are trading for less than their intrinsic or true value. It's akin to treasure hunting, where you're seeking out gems that the market has overlooked or undervalued. These stocks, in the eyes of a value investor, are priced well below their worth, providing an opportunity to buy low with the expectation of selling high in the future. The key to value investing lies in fundamental analysis. This involves a deep dive into a company's financials and operations. We're talking about examining balance sheets, income statements, and cash flow reports. We're scrutinizing earnings, debt levels, profit margins, and dividends. All these elements come together to paint a picture of a company's financial health and its potential for growth. But it's not just about numbers. A value investor also considers qualitative factors like the company's competitive advantage, its management team, and the industry it operates in. A strong brand, an innovative product, a stellar leadership. These can all contribute to a company's intrinsic value. What makes value investing intriguing is that it's not about following the crowd. It's about independent thinking and patience. The market can often be irrational, driven by emotions and short-term trends. But a value investor believes in the longer-term perspective. They believe that over time, the market will recognize the true value of the undervalued stocks and correct itself. So, in a nutshell, value investing is about finding and buying underpriced stocks and waiting for the market to eventually realize their true value. It's about being patient and disciplined, not being swayed by market hype or panic. It's about making informed decisions based on thorough research and analysis. In essence, you're hunting for bargains in the stock market. And who doesn't love a good bargain, especially when it can lead to substantial returns in the long run? Stay tuned as we delve deeper into the process, benefits, and risks of value investing in the upcoming scenes. The process of value investing isn't a walk in the park, but it's certainly achievable. The journey to becoming a successful value investor follows a well-trodden path. It's a four-step process that involves research, understanding, assessment, and action. Let's start with research. This is where you roll up your sleeves and dive deep into the company's financials. You'll need to analyze balance sheets, income statements, cash flow statements, and more. You'll want to understand the company's earnings, debts, assets, liabilities, and how these have changed over time. It's not just about the numbers though. You'll also want to look at the company's business model, its competitive landscape, and its growth prospects. The next step is understanding the market. This is where you'll need to have your finger on the pulse of the economy. You'll need to keep an eye on interest rates, inflation, and other macroeconomic indicators. You'll also need to understand the sentiment of the market. Are investors bullish or bearish? Are they favoring growth stocks or value stocks? This information will help you make sense of the company's stock price and its future prospects. The third step is assessing the intrinsic value of the stock. This is where you'll use all the information you've gathered to calculate what you believe the stock is truly worth. There are various methods to do this, such as the discounted cash flow analysis or the price-to-earnings ratio. The key here is to be conservative in your assumptions and to always leave a margin of safety. Finally, it's time to take action and make the investment. But remember, timing is everything. You'll want to wait for the right opportunity when the stock is undervalued. This is when the market price is less than its intrinsic value. It's about being patient and disciplined and not getting caught up in the market's short-term fluctuations. The process of value investing may seem daunting at first, but with practice, it becomes second nature. It's a powerful strategy that can yield significant returns if executed correctly. Remember, the key is to buy stocks less than their intrinsic value. Now that you know the process, you might wonder, what's in it for me? Well, let's delve into the numerous benefits of value investing. Firstly, value investing can lead to high returns over the long term. It's like playing a game of chess where patience is key. You're not looking for quick, flashy wins. Instead, you're strategically positioning yourself to checkmate the king. In other words, you're buying stocks at a discount and waiting for the market to recognize their true worth, which could result in substantial gains. What's more, value investing also helps in reducing risk. By purchasing undervalued stocks, you're essentially building in a safety margin. This margin of safety acts as a cushion against any unforeseen market downturns or fluctuations. It's like having an umbrella on a cloudy day. It might not rain, but if it does, you're prepared. And let's not forget about the opportunity to capitalize on market inefficiencies. The stock market isn't perfect. It often overreacts to good and bad news, creating potential opportunities for savvy investors. When the market panics and undervalues a stock, a value investor sees a sale. It's like finding a designer dress at a thrift store. To the untrained eye, it's just another dress. But to you, it's a steal. Moreover, value investing encourages a disciplined approach to investing. It's not about following the crowd or getting swept up in the latest trends. It's about doing your homework, analyzing financial statements, and making informed decisions based on intrinsic value. It's like being a detective, sifting through the clues to find the hidden gems. Lastly, value investing provides an opportunity to invest in companies you believe in. You're not just buying a stock, you're buying a piece of a business. It's about investing in companies that you understand and trust, companies that have a solid track record and a promising future. It's like planting a seed and watching it grow. You're not just a spectator, you're an active participant. So, there you have it. Value investing can be a goldmine if done right. It offers the potential for high returns, reduced risk, and the opportunity to capitalize on market inefficiencies. It's not just about making money, it's about making smart, informed, and ethical decisions. Scene script. However, like any investment strategy, value investing isn't without its risks. Let's start off by addressing the elephant in the room, the risk of misjudging a company's intrinsic value. When we're on the hunt for undervalued stocks, we may stumble upon a company that appears to be a golden goose on the surface, but is actually a ticking time bomb. This situation can arise when we overlook important factors such as a company's debt levels, management quality, or the competitive landscape of its industry. Next up, we have the omnipresent risk of market volatility. The stock market is a roller coaster ride, and value investing is no exception. You might find a stock that's undervalued today, but there's no guarantee that it won't dip even lower tomorrow. Similarly, an overvalued stock doesn't necessarily mean it won't continue to climb. This unpredictability can lead to potential losses. Lastly, but certainly not least, we have the risk of time. Value investing isn't a get-rich-quick scheme. It requires patience, as it might take years for a stock to reach its true value. If you need liquidity in the short term, this strategy might not be the best choice for you. These are the primary risks that come with the territory of value investing. But remember, no investment strategy is foolproof. Every strategy comes with its own set of risks and rewards. While the risks are there, proper research and patience can mitigate them. So, is value investing the right strategy for you? We have journeyed through the realms of understanding value investing, its process, benefits, and risks. Now it's time to revisit some of the key points and solidify our understanding. Value investing, as we've learned, is a methodical approach, requiring meticulous research and a deep understanding of the market. It's not about quick wins or short-term gains. Rather, it's about identifying undervalued stocks, investing in them, and patiently waiting for the market to recognize their true value. Remember, value investing isn't for the faint-hearted. It necessitates a robust mindset, one that isn't swayed by temporary market fluctuations. It demands patience, the ability to hold onto investments for extended periods, sometimes even years, till the market corrects its valuation errors. Furthermore, understanding the market is paramount. You can't just rely on numbers and ratios. You need to delve deeper, understand the business model, its competitive positioning, and its growth prospects. reading financial statements is just the beginning. The real value lies in interpreting those numbers and deriving meaningful insights. We've also discussed the benefits of value investing. It's a conservative approach that aims to preserve capital and minimize risk. However, it's not a foolproof strategy. It comes with its own set of risks. The market might take longer than expected to recognize the true value of a stock, or worse, it might never do so. And finally, perhaps the most important takeaway, value investing is not just about buying cheap stocks. It's about buying stocks that are worth more than their current market price. It's about understanding the difference between price and value. So, as you contemplate whether value investing is the right strategy for you, remember these key points. And remember, value investing is not just a strategy, it's a philosophy. And as with any philosophy, it requires time, patience, and dedication to master.